Hi, everyone, and welcome to The X, a podcast from inside Silicon Valley about how experience shapes everything, from products to businesses to entire industries. I'm Brian McLean, and I'm here with Demetrius Madrigal. Today, we decided to continue the FTX saga and talk about what the fallout means for Sam Bankman-Fried and the markets as a whole. Good morning, D. What are you thinking about all this stuff right now? This story just keeps getting deeper and deeper and deeper as each week passes.
I think it's interesting because it seems as though SBF is doing things that I would probably not do in his situation. Like all of the conversations with him, the interviews he's doing, I think that there isn't really very much good that can come out of it. So, I mean, we can get into that, but it's going to be interesting to see what happens. It almost seems as though he's making really bad choices right now.
Yeah, so I think there's two things that are occurring. One is what you think you should do as a human in that moment, being
Mm-hmm.
SBF. We'll call him SBF today; it's easier. And then what you actually should do. And you and I have friends that are lawyers, so they've taught us what you actually should do versus what you think you should do. So what
Mm-hmm.
you think you should do is like, oh my gosh, I should go on all these shows. I should tell them it wasn't my fault. I made a mistake. I should talk to all the investors, apologize, all this kind of stuff. What a lawyer tells you is don't say a word. And the reason is not because you're necessarily guilty, because what you say goes on record and it will be used potentially against you. So if you say something that you didn't mean or was, the wrong context, the wrong words, then that is going to be used against you when you do go to court and you have to make your case that day. Right now, SBF is doing the media rounds. We saw him on Andrew Ross Sorkin's media show the other day where he was interviewing all these top leaders and that kind of stuff. And he came in and talked about it. And he basically was saying that like, oh, this was a mistake, it was an oversight, basically poor risk management, and kind of inadvertently blamed his partner who ran the investment arm of Alameda Research by stating that she didn't basically inform him what was going on and he didn't really know what was happening over there. That is I think it's a bad case to make, in my opinion, because how is it possible that the CEO of the company or co-CEO of the company, working with top investors, celebrities, banks, going through your finances, getting investments, doing all these things, just doesn't know what's happening on the research arm that's on the other side? I mean, to me, it seems very odd, and it feels very like he's trying to wiggle out of jail time. I mean, did you get that from any of the interviews that he was doing? I know he's been in multiple places, but the one with Andrew Ross Sorkin was pretty revealing.
Well, I feel like if he was trying to wiggle out of jail time, he just wouldn't be saying anything at all, right? Because anything you say is like they tell you when if they arrest you, can be used against you in a court of law. So if he says anything, either unintentional or intentional, that is inaccurate or misleading, if he says like nobody ever told me this, and then they subpoena his emails and they go through it and they find like an email showing like here's like what's going on, and that he was informed, then they would make the argument in court that it's an ongoing pattern of fraud and misinformation.
Fraud, though, D,
Yes.
I mean, for context, because we always use the word fraud, and I think people think of it as like, oh, I lost my money. Fraud
Mm-hmm.
associated with jail time is basically, did he mislead FTX customers to believe their money was available and not being used as collateral for loans or for other purposes? Right? So
Yes.
you could kind of get out of these problems if it was like literally incompetence. But what we're asking about now when we say the word fraud is like, did he truly mislead on purpose the FTX customers?
Well, that's the question. Well, that's something that could come up in court is if he is continuing to say that I didn't know and all this other kinds of things that he did not intentionally mislead, which does not meet the necessary conditions for fraud. But if they go through his emails and say, oh, well, he did, and he's continuing to mislead, then that makes even more problems for him. He can get additional charges. I
Totally.
look at this and him saying, like, I'm not worried about the criminal charges to some extent. I'm trying to make the case that I just made a mistake and I'm going to come back with a new product of some kind, and you guys can invest in me again because I've learned from my errors.
So let's pause right there for a second. So in Silicon Valley, one of the things that you'll hear from investors and founders and stuff is that they like it when people fail because you learn from failure and then you pick
Mm-hmm.
yourself up and then you do something better next time. You're making the case that he wants to be able to walk away from this one do something else and say, hey, I learned from the previous mistake and move on. But
Yeah, this is not the first time that we've seen somebody who engaged in some pretty obvious wrongdoing who was just delusional and thought, "Oh, I can survive this and go back to the well and get more investors."
yeah, which I think is starting to become a thing of the past in the Valley. Honestly, like from what I'm hearing, with the Theranos trial and then this
Yep.
one and others, this whole idea of failure, there's a difference when your product fails. Like it's like, oh, people didn't want it. Like I realized
Mhm.
that there was a niche that I thought was there. It wasn't there. I failed from it. I learned to, do more research and figure out what my customers need and stuff. But when it comes to like potentially misleading customers or like faking things like in the Theranos trial, that's criminal. Like that's not a learning lesson. That's you know, that's that's like next level. Like you can't claim like the Silicon Valley thing of like, oh, I made a mistake, I want to start over, right? I mean, if you look at the case right now with SBF, the SEC, which is the Securities and Exchange Commission, the CFTC, the Commodities Futures Trading Commission, the Southern District of New York, and the Department of Justice are all investigating him.
And
That's
that's just in the
crazy.
U.S. That's just the U.S.
Yeah. Yeah.
So one of the things I'll like we've seen this before. I think people look at Wolf of Wall Street, Jordan Belfort, and they're like, "Oh, this guy was convicted. He went to prison. He came out, and even though he spent time in prison and was convicted, he's still got a pretty nice career and he does really well for himself." And that you could say whether that's a good thing or a bad thing, and I think there are elements on both sides. But I fully believe that a lot of these people who engage in this kind of behavior are so delusional that, like his Elizabeth Holmes, if she hadn't been convicted, would be trying to raise money right now for her next venture.
Oh, for sure.
They're just completely out of touch. And the other thing for this is why I don't think it makes sense for SBF to do this because he doesn't seem to grasp the magnitude of what happened. This is not Jordan Belfort like I stole a few $1,000,000, and this is a disaster on the magnitude that dwarfs the Enron scandal.
Yes.
This is history book kind of stuff. This is not, I'm going to bounce back from this and people are going to see that I just made a mistake. So even if he was just incompetent, it was like a monumental level of incompetence. And he should just understand that and lay low and not say anything that could be potentially incriminating. And if that all works out and he doesn't go to prison for whatever reason, because it is actually very difficult to prosecute um, white collar crimes, and the fact that he was incorporated in, I think it was incorporated in, I think it was Antigua, and then his headquarters were in Barbados or Bermuda or something like that. Like that is saying to me, like, all right, you're trying to split off investigations into a different jurisdiction, so it makes it more difficult for them to find out if he did wrongdoing.
Yeah.
Already, I'm already seeing that kind of off the top of the bat, and then again, this is all alleged. We don't have any specific knowledge of them doing it, but it certainly quacks like a duck. Uh, Even if all of that stuff doesn't work out, he's going to be fairly toxic. He maybe best case he keeps his head down. He can avoid an actual criminal conviction and jail time, and maybe he can write a book or something and go that route.
Yeah. He pissed off some very wealthy people, D.
Yes.
And it's not just your average investor. These are investors that have a lot of connections and power and that kind of stuff, and they're not happy. They're upset. They're very upset. And so it's not a place that I would want to be. But as FTX moves through bankruptcy protection, which they will obviously file for bankruptcy, it's that 32 billion loss. Private citizens can file suits as well, and I think it was like 8 billion in customer funds have been lost. But he's stating that personally he only has about $100,000 left.
Hmm.
So I look at it and I go like, don't count on getting your money back. It's a rocky road to anything that would resemble you getting your money back. I think this is one of those collapses where you kind of have to go, it's over, it's done, right? Like, and hope that they can figure out whether or not this was fraud, whether or not this was incompetence, and like what are the next steps basically after that. But um, there was something else that was reported I thought was really interesting. You know, there's a question that was posed a while back of like how how important are the opinions and feedback from your investors and things like that. And sometimes they're useful when it comes to like the business, but sometimes they're not as useful when it comes to the product itself, right? Like it's your product better than everybody else. But CNBC reported that early this year, as the crypto meltdown basically started draining the industry of liquidity, FTX executives pleaded, and as well as investors, to preserve cash and stop doing celebrity endorsements, basically like
Hmm.
shore up the company. But instead, he kept plowing forward. And shortly before the crash, he tried to secure a deal with Taylor Swift, which I'm sure everybody saw in the news, roughly $100 million over the course of 3 years. Um, he was dead set on hyping the company. And thankfully, none of that happened. But it was just a bad timing on all of it, because this could have gone on for a lot longer if the industry didn't start
Yeah.
having a meltdown.
Yeah, I think it's one of the things that kind of exposed what was going on. They took a bad risk, basically were embezzling, and then they got caught. And that's usually how these things happen, right? And one of the things that you see people do, what the executives were pleading with him to do was to, just play it safe and ride it out. And he was out trying to spend money in order to bring fresh capital in the business. That could be that he was just in denial and didn't know, but it could also be that he was trying to double down because it was too late. It was too late to preserve cash, and he
Mm-hmm.
needed to get a fresh influx in order to find time to try to fix it.
Yeah. I mean, let's take a pause right there and say, where is everything right now? Like, where is crypto sentiment following this massive crash? I mean, just to compare, because I know a lot of people are worried, like, what's the difference between like FTX and Coinbase, right? A lot of people have their money in Coinbase. Coinbase states that they are a 1-to-1, meaning like they have, for every dollar that's put in, they have dollar to back it up, like if it's necessary,
Mhm.
and they went through all the regulations and that kind of stuff. Market is still down. I heard that the trading volume is really, really low compared to a year ago.
Yes.
But you had told me that you saw some study. I think it was a smaller one with only about 800 people or something like that. But it looked at crypto sentiment in the United States, and that was done very recently. What was the results of that one?
So this was done by CNBC, and they found that just 8% of Americans have a positive view of crypto, which is down from 19% in March. And as people are going to point out that this is a relatively small sample size, but it's the same methodology from the previous research.
Okay.
So even if it is kind of not the most representative of America, of like all of America, it is still kind of a substantial drop within the similar window.
Hmm.
So to some extent, it all makes sense. It's got a good, strong, what we call face validity. It's kind of what we expected between the onset of crypto winter, NFTs kind of dropping out and becoming much less popular, and now this FTX thing is just another nail in the coffin.
Absolutely, yeah. And so there's a lot of TV personalities that have been kind of pushing crypto and pushing, FTX and things like that. And I think they saw it as like this next financial wing, like getting in
Mm-hmm.
early on something, and that includes, Jim Cramer. I've talked about it. He's gone back and forth about his feelings at certain times regarding Bitcoin and all that kind of stuff. And then the big one is Kevin O'Leary, who right now is kind of in the hot seat because he was invested into FTX, right?
Yeah, I think they are both pretty invested in it. Jim Cramer has gone the route of like, get your money out of crypto now. Maybe it'll come back later,
Yeah.
but just get it out, which is maybe a little bit too little, too late for Jim Cramer. But he's trying to, I think, salvage his reputation a little bit, and it makes sense to not be in crypto right now because I don't think it's going to be going up. And one of the things to keep in mind is, for with any investment, you can always get out and get back in. So you can get your money out, and then when it looks as though okay, something is happening, because that's what it's going to take for crypto to really start to establish itself again, is that something is going to need to happen in order to bring people around on it so that they can feel as though okay, this is something that's real again. It's not just going to happen spontaneously and just organically. There is going to be, I mean, people have mentioned regulation. Something else needs to happen in order for people to say okay, this is different now. And I think it does make sense from that perspective to possibly get your money out and then keep an eye on it. And if it starts to turn around, you can get your money back in. And you're just missing out on some gains, but that is kind of like just you don't want to be in a situation where you get losses because you're afraid of missing out on gains. That's not really a good place to be.
Well, I mean, it's counterintuitive to everything that Warren Buffett's ever said. Because
Yeah.
I take from him like he doesn't like crypto. Obviously, he doesn't see a value of it. He said it can't produce anything. It's not like a farm or livestock or anything like that. It's kind of the way he talks about gold. To some extent, it's like you're just kind of
Hmm.
holding it, but you're not really like doing much with it. But one of the things that he said a long time ago was, if you're investing in a company, you have to think, I believe in this company. I like what they're doing, that kind of stuff. And I'm in it for the long run, meaning I just invest and I let it ride. Most people, do really well when they hold things for 20 years. I think with crypto, it became one of those things where people were watching it day in and day out. They were like, sell,
Hmm.
buy, right? That's a very volatile market. And so it makes total sense that being highly leveraged and convincing all these TV personalities to pump you up and kind of like talk, amazingly good about the possibilities in the future and that kind of stuff, and getting more retail investors in. When you have a crash like this, you're not prepared for it. Even though
Yeah.
you would think logically that you would be, it doesn't seem like any of these people were prepared for it. Even Kevin O'Leary said in one of his interviews, he said, "Yes, I did get caught up instead of the groupthink." You would think that
Yes.
people who do due diligence don't get caught up in groupthink as much.
Well, I mean, they're all human beings, so they're not immune to it. I would say that there's probably a fair amount of stuff still going on. So there's a couple of things that I would warn people against, and take a look at if you're invested in this space, take a look at yourself and see if this is affecting you, because it's not the best decision making process. One is the sunk cost fallacy of like, I already put my money in, and maybe I'm still up, maybe I've lost. Either way, doesn't mean that you need to stay involved and continue to lose because you've already been committed to it.
Yeah.
So try to avoid thinking like that. The other is you kind of have this confirmation bias where you have made the case that crypto is the future and all these kinds of things. And to be perfectly clear, none of this means that crypto can't be the future. It just means that it's not the present right now.
Yeah.
And it also means that, like, you know what, maybe the future isn't necessarily crypto as an asset class for investments. Maybe there is some other application for it. So with that in mind, I don't think there's any problem with, I will say this again, with getting out of crypto now and getting back in the future.
Yeah, I agree with
Uh,
you. There is a conversation happening, as the second part of this discussion today, D, which is now everyone's kind of coming back to, and when I say everyone, I mean the local conversation around here, because this is a Silicon Valley based podcast for the most part, right? Is that
mhm,
there's this conversation coming back around centralized versus decentralized exchanges, right? So when you think about Coinbase, right, it's like centralized. It's like a company that kind of manages your crypto. It holds your crypto. It does the transaction for you. It makes it very easy for like new investors and general users who just want a simple place to buy stuff, right? But when it's centralized, like Coinbase or FTX or Binance, these unregulated and not FDIC insured assets or companies, you're in this situation where if something happens to them, you have no real recourse to get anything back, right? It's
mhm.
because you're relying on them to basically hold all your money for you. Now, people are talking about, well, we should be putting our money into decentralized exchanges and actually going back to the root of what we really wanted to do from the beginning, which was this kind of peer-to-peer currency transaction. And a decentralized exchange is basically not managed by a single entity, and it's just a direct peer-to-peer. So like, you have your crypto, I want it, you sell it to me, it goes from you to me. It doesn't go through anybody. How do you feel about this conversation coming back to the decentralized area, what they call DEXs? Because I know that you addressed this early on. Like, you didn't understand why everyone was moving everything into a centralized organization when that goes against the ethos of what crypto was really trying to do.
Yes. So, in order for a traditional exchange to occur, you need to have these market makers in the middle, right? So these are people who are buying and holding and then selling when a seller comes along. So they're essentially kind of like dealers, right? So they're buying inventory on any given currency, and then when somebody wants to buy it, they're willing to sell it to them. And they've been using Tether in between in order to kind of make this happen. So that becomes a situation because the market makers are inherently centralized, right? So now, if you're for these decentralized exchanges, it can enable potentially for some people to work as market makers, and for other people to just do direct peer to peer. And I think that is very interesting. I actually think that decentralized exchanges are more interesting to me than cryptocurrencies themselves at this point in time. And it comes back to this quote that I heard from Kevin O'Leary. He did an interview recently, and he said that this FTX crash was no different from what happened with Bear Stearns or Lehman Brothers. And I heard that, and the first thing I thought to myself, well, if there's no difference, then what's the point? Why does this even need to exist if it's no different? If these same problems can still happen?
Mm-hmm.
And I think there's potential. I'm not going to say that it will be delivered on, but there's potential for decentralized exchanges to avoid some of these things that we're seeing with FTX, Bear Stearns, and Lehman Brothers, where bad actors within a centralized organization can take these inappropriate, potentially criminal actions and tank, billions of dollars in value for people who might be putting together retirement funds or school funds and things like that.
Yeah.
Uh, a lot of things need to happen in order for that to work. Like the decentralized exchange has to be set up with certain rules. There needs to be certain protections in place. It has to make sure that there's not some back door for somebody to come in and either corner the market on validators so they can essentially kind of backdoor centralize a decentralized platform.
Yeah.
Um, but if they can get to the point where these things are uh, they have the proper redundancies and the proper protections, and everything is happening in the way that we kind of hoped that they would. I don't think that there's any reason why this needs to be limited to just cryptocurrencies. Trade some fiat currencies on there. Move stock exchanges and things into decentralized platforms and decentralized exchanges because they can potentially be better protected and more robust.
Well, I mean, that's essentially what's happening now, right? We know some people that work at these decentralized platforms where they are trying to do
Mhm.
like a stock market type setup on there. And then if you look at Uniswap, a lot of people use Uniswap in order to move tokens. It's a decentralized network as well, to move large
Mhm.
numbers of tokens between individuals. I mean, the other corner of this though is now everyone's saying, um, I keep hearing this like, oh, well, you need to have a hardware wallet. You need to move everything off of these centralized networks and move them into a hardware one, which is basically we're back to like pushing everything onto a USB drive and then
Well, I
putting it
mean,
in a
from
safe.
from a user perspective of somebody who like not, I mean, the one of the issues I have with crypto from a technology standpoint, cryptocurrencies as a standpoint, is the advantages of the technology are all on the side of the minting authority, right? So the technological advances of cryptocurrencies and the way that the blockchain works is that it is ultimately really good protection against counterfeiting. So if we're talking about a fiat currency, that means that it would be all the benefits would really be for the U.S. government, people who are minting it, because now you can hold out counterfeiting. Doesn't really benefit the end user nearly as much. For for something like a decentralized exchange, uh, if you can kind of avoid some of these things of people doing things that are was off the books or moving things around, funneling a bunch of investor money into their own private projects like Alameda Labs and things like that. That's a significant improvement.
Yeah. Well, I mean, I look at it and I go, okay, well, if we're trying to move these assets now onto like hardware wallets and things like that, to me it just means that there's a problem, right? Like fundamentally there's a
Right.
problem. Like it's like telling people like to take everything out in cash and like put it in the safe in their house, right? Like instead you need to shore up
Worse.
these.
It's worse because these hardware wallets can corrupt and fail.
Yeah, they could fail, things can happen. I heard recently that the original designer of the iPod, I forgot what his name was, the guy who created the Nest, as well. I'm just drawing a blank right now. Anyways, he recently helped Ledger, which is a big hardware wallet company, design their latest hardware piece. It's beautiful, it looks amazing. It's kind of like the iPod basically. And it's like, I just don't, I understand that what they call cold storage, that's called cold storage. It makes you feel safer. It's like your tokens are actually on something that you own, like holding, like gold, for example, right? You take your gold and you put it inside of a safe. But it feels like it's going against the grain of society of what we're trying to do. We're trying to make things software based,
Yeah.
trying to make them safe,
Yeah,
encrypted.
you're making it very unusable. You're
Yeah.
creating a new product that you have to purchase. I mean, it's basically just a beefed up hard drive or flash drive or whatever it is. I've seen too many horror stories of people who they lost their physical hard drive. They they lost the password to get around the encryption, so no, they can no longer access it. It got physically destroyed. All these kinds of things. And honestly, if you're going to do something like that, you might as well just like go out and buy a bunch of gold and throw it in a safe,
Yeah.
because the safe doesn't need to be encrypted. And if you forget your combination to get into it, you can still crack it in other ways, and you can still get your initial investment back.
Absolutely. Did you hear
It's,
about that?
I
Did you
don't,
hear about that guy who had like 7,500 um, bitcoins on a hard drive that got dumped like 5 years ago, and he spent the last 5 years going through
it's like
dump sites.
digging it into in landfills trying to
Uh-huh.
find it. That sounds like the life I do not want.
Yeah, I mean, but that's basically what happened because he has $300 million worth and couldn't
Yeah.
believe it, right? And so it's like that's a perfect example, right? You like lose it or something, and suddenly it's just gone, right? Um, I feel like what Coinbase is doing is not necessarily like a bad thing or anything. Like I feel like if they can encrypt it, they can keep it safe, and they can have regulation around it so that they have enough money to back you up if something gets stolen or lost or whatever it is. That's kind of the best
Hmm.
case scenario for a centralized network. And then if you're
Or
going to
centralized.
yeah, and if you're going to run a decentralized network, I feel like giving the power to the user. So like an encrypted send feature between you and me, right? I have this crypto, I'm sending it to you, it's encrypted. Does that mean that someone gets paid in the middle at all? I mean, how do these decentralized networks get funded? Are they just done because people just want to spend the time working on them, or do we give them a little bit of every transaction so it can continue to grow? Is it like a Wikipedia? Like, I mean, what are your thoughts on
Well,
that?
from what I understand, a lot of the decentralized exchanges that I've seen
Uh huh.
have kind of been funded by creating a token and then issuing that.
Yeah.
So they will, create a token, sell it, and um, the money they take from that goes toward funding the exchange. I
Yeah,
think
but you
that's
sell a
one of the
token,
ways.
D, and then what do you do with the token? This is the confusing part about it. There's thousands of tokens
Yeah,
at this point. We can create a token right now. We'll just like the X
yeah.
podcast token, and then we sell it, and everyone buys it. And there should be expectation for what you could do with it and or what you get from it. And
So for a lot of these exchanges, the token is giving them voting rights on what's called a DAO, a decentralized autonomous organization.
uh huh.
So it's essentially the same thing as selling stock in a lot of ways. Like you buy this token and it gives you voting rights on governance for the exchange.
Okay.
There's an issue there in that if too many people are buying, if because these things are exchangeable, the same thing as what can happen with stock is you could be subject to a hostile takeover and somebody can buy up 51% of those tokens. Now they have centralized control over that exchange.
Yeah.
That's one thing that needs to be overcome in order for this to get to where it needs to be. And I agree that companies like Binance and some of these other, I think, more reputable exchanges are probably in a fairly good position. But one of the things that we learned from like the 2008 crash, where Bear Stearns and Lehman Brothers and some of these others went down, is that the leadership that is handling things appropriately now are not necessarily going to be that same leadership 10, 20, 30 years from
Uh
now.
huh.
And you never know if you're going to get a Elizabeth Holmes type in there 15 years from now who's just going to fleece the entire company.
No, absolutely. I mean, when you think about everything we talked about today, and you think about where the market is now, if you took a moment, you like took a deep breath and said, okay, well, we had this conversation a year ago, we had this conversation 2 years ago, and here we are right now. What do you think post FTX collapse this market's going to look like in 2023, 2024? I've tried this exercise. I've tried to close my eyes and think about this and look at the data. And to me, it feels a bit nebulous and almost like inevitable that it's not going to do much because consumer sentiment is so low.
I still feel like we are in. If you think about how the internet was established and got created, I still think we're in the 1980s of the internet era when it comes to crypto.
Yeah.
I think we're still in very, very formative stages, not ready for prime time, not really ready for consumer use. I think this is still at the point where this should still be kind of on just the people who are in it for the love and not interested in making too much money at this point in time because it's not ready for that. I don't think anything's going to change very much in the next 2 years. If anything, we might see a slowdown. I think it's very likely we're going to see a slowdown in growth and experimentation in this area. And the people who, I hate to say it, but a lot of people who are probably going to get involved right now, a lot of them are not going to make a lot of money. I think there will be a few that do, and eventually someone will come along and they'll start kind of consolidating a lot of these tokens and maybe some of these exchanges into a fewer number of exchanges because that tends to be what happens, right? You see, as technology advances, you start seeing the early experimentation, like the Palm Pilots and the Treos and things, and then eventually somebody builds an iPhone,
Hmm.
right?
Hmm.
And that consolidates the experience into one thing. And then somebody builds an Android, and that creates the competitor. And then you start to see, like with in like current stock market exchanges, right? You see Nasdaq and New York Stock Exchange, right? But you don't see 15 of them in that same area in quite the same way. There are other
Yeah. I mean,
exchanges
do you think there's a possibility that a company like Coinbase could get sold to a bank and it just becomes a wing of a bank instead of trying to like stand out on its own?
Yes, and I think that's one of the issues with what's going on, especially with centralized organizations are ultimately they're structured for that to happen. They're kind of designed for that is to be bought and sold as property. So I absolutely think that's possible, especially if they continue to have uh, issues within the crypto market and with what we're seeing as far as kind of sentiment. If sentiment keeps doesn't improve, then more and more people are going to exit that market. We've already kind of seen that a lot of the promises about like this being decoupled from like crypto being decoupled from the economy and stock performance, investment markets and things, and being its own thing and being insulated against that and against inflation has kind of been proven false.
Yeah.
So, like I said before, something is going to need to happen in order to re-energize the crypto market, and it's could very well be the kind of thing that puts Coinbase and maybe even Binance on a course for being acquired by Goldman Sachs or Ant Financial or some of these companies.
Absolutely. Yeah. I mean, it's a crazy time right now. Usually post crash of a big company like that, you see a big shakeup. And also it's a time when entrepreneurs tend to step up and create new and interesting things, right? Like
Yeah,
this is the time when they look at it and they go, okay, well, it crashed because of X, Y, and Z. Maybe I'll try, you know, doing something completely different and come from a different angle. Right. And, we saw this a little bit with, uh VR, right, where everyone was pumping VR super hard and stuff, and then ultimately like the best use cases seem to be in medical and military and places like that where you want to like protect
yeah,
lives and individuals by keeping them at a distance, and so they could use the technology to learn or to
yeah.
control
So
robots or whatever.
yeah, telepresence gaming has been interesting. I
Yeah.
think telepresence for things like travel and things like sporting events. Like if you could actually, and we've said this before on the VR podcast, you could actually kind of have an immersive like sideline Super Bowl experience, for
Yep.
example, or a World Cup experience. Or maybe you want to actually have a really immersive experience seeing the Northern Lights, but without being freezing cold for weeks at a time. Those are, I think, interesting for that. And I think when it comes to when you talk about the future for crypto in general, for anything using blockchain, I'm thinking a little bit more 10 years out. and really keeping an eye on what can happen with these decentralized exchanges. Those are
Hmm.
one of the things that are really the most interesting things to come out of the space for me right now, because I think it can represent some actual improvements if they can avoid some of the pitfalls that we've talked about. I think that NFTs have a future. I don't think it's going to be like $1 billion product, $1 billion kind of category, or multi-billion-dollar category, like a smartphone that's transformative.
Hmm.
I think it might be something smaller. I think it will have a specific, more utilitarian use cases, and it will be less like, you buy an NFT for hundreds of thousands of dollars. I think it will, but I think there are applications for that technology.
Absolutely, yeah. I mean, I think
And when it
definitely
comes
gaming, right? I mean,
to,
the tokenization of currencies within games and stuff like makes total sense. Like you're within a certain platform and you're moving certain tokens around and then you kind of cash them out. It's almost like being at an arcade, right? A lot of that kind of
so
logically makes sense to people, I think.
one of the things I'll say is that within the gaming community, because and this all comes out of the way that microtransactions have really been abused,
Yeah.
coming into crypto. The gaming community is heavily anti crypto in general. What's interesting though is there is a little bit of a potential within that field if you're not relying on hype and telling people that they're gonna get some of these NFTs or tokens and they're gonna make a bunch of money off of it, and you can be a little bit more realistic about it, because it could be a currency or a token or something that cuts across international boundaries,
Yep.
so that somebody from Singapore can engage in transactions with somebody from the UK, for example, and not have to go through a lot of exchange rate elements that are involved.
Absolutely. There's utility there that can be kind of fleshed out. And I think that if we keep our eye on the utility and the need, that's where this technology tends to flourish.
Yeah. But again, that is just that's a liquidity maker. It's not necessarily like the kind of thing where that people are saying that this is the future. It's a niche case. People, I think, need to understand that it's a long tail approach and it should be approached as such. And when people took cryptocurrencies when they were still in their infancy and they weren't ready, and they blew them up and said that this is going to be worth $1 million, $500,000 a coin in the next 2 years, or I'm going to cut off a body part and eat it.
Yeah.
Uh, that's just false promises, and it's not going to help. I think that was detrimental to these uh, these products kind of finding a use case and finding a home in the world.
Absolutely. Well, I think that's a wrap for today, D. I mean, that's a good conversation we had about this. I think following up on the FTX saga is necessary, but also just talking about where this technology is going to go from an experience standpoint. As this stuff kind of unfolds, we'll come back in, I think, and dive into it. But I did want to make a point to everyone before we actually sign off here. In our next season, we're actually going to be moving to YouTube in regard to we're going to start putting our podcast on YouTube, but we're also going to um, post our links and things like that there. So it's going to make more sense for us because that's where our audience tends to sit. So I want to thank everyone again so much for taking the time to listen to us today. Really appreciate it. We'll be posting links to many of the sources we referenced on Twitter, so you can follow us on Twitter at the X Podcast One. That's the X Podcast number one. As I mentioned before, next season we'll be moving that to YouTube. If you like this podcast and found it interesting or informative, it helps us a great deal if you subscribe or leave a review on whatever platform you use. Thanks again, and we will see you all next week.